Howdy, y'all. Welcome to Liberty Call. Today is Friday, April 21st, 2023. Hope everybody's having a fantastical day out there. No Astros baseball yesterday. They had an off day. How rude of them. But tonight they're playing on Apple, which I guess I'm not watching the game because I don't feel like trying to pirate the game or sign up for a free trial or whatever. So anyways, hope everyone's having a good day out there. It's a little gloomy here in Colorado. It's a balmy 41 and overcast. So it's not very nice outside, unfortunately. Usually when it's this cool and the sun's out, it's quite pleasant, but not today, unfortunately. All right. Well, yeah, kind of another meh day in the markets. I see a lot of green, but nothing to get too excited about. And it looks like the Asian markets really took it in the nuts overnight. But all right. Well, if it's your first time watching Liberty Call, again, thank you very much. I'm glad you're here. Please give me some thumbs up, likes, shares, subscribes, follows, all that good stuff. I greatly appreciate it. And let's go ahead and jump into the numbers for today. Dow Jones was up 0.07% or 22 points, closed at 33,808. S&P 500 was up 0.1%, closed at 4133. NASDAQ was up 0.11%. Woo! The big gainer for the day. Closed at 12,072. The VIX fell 2.33%. It's currently at 1677. Canada was up 0.3. Brazil up 0.44. And Mexico was down 0.16. European markets, Germany was up 0.54, UK up 0.15, France up 0.51, Netherlands up 0.14, Spain down 0.37, Italy up 0.43, Switzerland up 0.61, and Portugal up 0.65. In Russia, both exchanges were basically flat for today. The MOEX was up 0.08, the RTSI was up 0.06. And the overnights in Asia, starting out with the Nikkei Japan, it was down 0.33, Australia down 0.43, New Zealand up 0.41. In the Chinese markets, the Shanghai was down 1.95, the Shenzhen Component down 2.28, China A50 down 1.28, DJ Shanghai down 2.09, Hang Seng down 1.43, and Taiwan weighted down 1.06%. Ugly overnights in Asia. So, all righty, well, let's go ahead and let's take a peek and see how the markets did for the week. All right, starting out with the S&P 500. Looks like it's going to finish the week off slightly down by, we'll say 0.08. The Dow 30 is going to finish the week off down about 0.33%, about a third. NASDAQ's going to finish off down about 0.78. The Dow Utilities up 1.12, and the Dow Transports up about 1.08. So looks like the transports and utilities pulled off a positive week, and then the major indexes, the S&P 500, NASDAQ, and the Dow Jones, all in the red. The best of those three was the S&P 500, which was pretty much flat for the week. All right, let's take a zoom out and see how things are doing on the long-term trend. We can see here, again, going back to the beginning of January of 22, we've been in this long-term downtrend. We did break it in early, January, and we've just kind of been sideways since then. Haven't really gone any higher than these two peaks, and we'll see on the next leg down, will it break this lower band, or is it going to extend higher and break this upper band? So we shall see. My personal belief is that things are going to continue to slide more in the negative, just because, there's really not a lot of good news to point to and say, yeah, this is excellent right now. So anyways, all righty. Well, let's go ahead and get our economic data for the week, and let's go through that. All right. Initial jobless claims this week came in at 245,000. The forecast was 240. Last week's number was 240 also. Let's see here. Continuing jobless claims came in at 1.865 million. Forecast was 1.82, so about 43 or 45,000 over forecast. Last week's number was 1.804 million, so pretty decent jump there. Housing starts came in at 1.42 million. Forecast was 1.4. Last month's number was a 1.432, so it did recede a little bit. Existing home sales came in at 4.44 million. The forecast was 4.5. Last month's number was a 4.55 million. And the existing homes month over month actually contracted by 2.4%. They were expecting a positive 5% growth, especially after last month's number of a 13.8. So they were a bit off there. All right. U.S. Leading economic indicators month over month, or leading index month over month, came in at a negative 1.2. Forecast was negative 0.6. Last month's number was a negative 0.5. So grew a bunch there. And the Purchasing Managers Index Composite came in at a 53.5. Forecast was 52.8. Last month's number was a 52.3. So it did grow a little bit from last month's number. So, all right. Well, that's all the economic data that was on the docket for this week, at least the major stuff. Let's go ahead and get to today's market recap. S&P 500 struggles for direction on mixed quarterly returns or results. All right. Get my notes up here so I don't sound like a village idiot, which I do most of the time anyways. All right. On Friday, the S&P 500 was mostly flat as investors evaluated mixed quarterly results, earnings reports, and awaited results from big tech next week. Amazon rose 3% after reports emerged that Whole Foods division is planning to cut hundreds of jobs as part of a reorganization. Well, hey, that's not good for them. Tesla, which suffered a 10% slump after disappointing quarterly results, bounced back after it announced plans to increase prices in the U.S. However, mixed quarterly earnings weighed on investor sentiment, with materials being the biggest loser of the day, driven by a decline in Freeport McMoran copper and gold. Although the mining company's quarterly results exceeded expectations, the profit more than halved, and it warned of further impact from labor shortages, sending its shares down over 5%. Regions Financial reported first quarter results that missed on the bottom line and experienced a 3% decline in deposits. In contrast, HCA Holdings jumped over 4% after upgrading its annual guidance, following better than expected quarterly results. Investors remain cautious about tech stocks, with Alphabet and Microsoft set to report earnings next week. Energy stocks did not benefit from the uptick in oil prices as Schlumberger shares fell over 5%. Although the oilfield services company's Q1 results surpassed expectations, it suffered from weaker margins and cash flow. Free cash flow for the quarter dropped by $265 million, which was below Goldman Sachs' estimate of $772 million, quite a bit, driven by, quote, stronger than expected use of cash in working capital, end quote, according to Goldman Sachs. On the economic front, manufacturing activity expanded in April with a reading of 50.4%, up from 49.2, indicating a return to growth. Services activity also improved to a reading of 53.7, up from 52.6 in the previous month. While investors are cautiously optimistic about the U.S. economy, ongoing concerns about mixed earnings results and tech stocks could potentially undermine market confidence in the coming weeks. Right. Well, sounds like they kind of view things like I do, that it's not great, it's not bad, but they're a little more optimistic than I am. All right. Federal government's up to no good again. U.S. financial regulators to tighten rules on non-bank firms' risk assessment. Let's see what the Treasury's trying to impose on the financial services community. The Financial Stability Oversight Committee, FSOC, has proposed guidance to make it easier to designate non-bank financial institutions for regulatory supervision. How nice of them. They're going to decide, hey, we're going to go ahead and start regulating your company. Even though we had never had any business there, we're going to go ahead and now have oversight. Isn't that nice of them? Sure is. I don't remember if these people voted on this. Let's see here. The proposals were released for public comment just over a month after two regional bank failures sparked the biggest contagion threat since the 2008 financial crisis. U.S. Treasury Secretary Janet Yellen, the dumbest human on earth, has raised concerns about non-bank financial institutions, including hedge funds, private equity firms, and pension funds, as potential source of financial instability because of lack of supervision. Yeah, because that's the problem. The FSOC, which is chaired by Yellen and includes Federal Reserve Chair Jerome Powell and heads of other major financial regulators, was granted the ability to designate non-bank firms as systemically important, but this was made more difficult in 2019 with changes made under the Trump administration. Ooh, evil orange guy. I can't believe he did that. Yellen said that the new guidance removes some inappropriate hurdles to designate non-bank firms, causing the process to take up to 6 years. The new guidance drops requirements that FSOC consider the likelihood of companies distress and conduct a cost-benefit analysis of each designation, but it allows a substantial communication and engagement with companies under review for designations. The FSOC proposed new risk assessment framework aims to enhance the Council's ability to address financial stability risks by reviewing a broad range of asset classes, institutions, and activities according to a Treasury fact sheet. These include markets for debts, loans, short-term fund equities, digital assets, and derivatives, counterparties, payments, and clearing systems, and financial entities, including banking institutions, broker-dealers, asset managers, investment firms, insurers, and mortgage originators and services. The new framework also specifies vulnerabilities that FSOC and member regulators would consider when evaluating potential stability risk. These include leverage, liquidity risks, and maturity mismatches, market interconnections and concentration, operational risks, and risk management activities. The new guidance is, quote, substantial improvement, is a substantial improvement, end quote. It has important attributes to be clear, credible, and balanced and consistent, said National Credit Unit Administrative Chair Todd Harper. Yeah, you can't trust a guy named Todd. However, Brian Corbett, President and CEO of Managed Funds Association, which represents hedge funds, said alternative asset managers do not pose a systemic risk, end quote, and are subject to Securities and Exchange Commission's regulations already. All right. So again, hey, they just decided they're going to, impose supervisory activity over institutions that they didn't have before. I mean, if I was one of those companies, I'd give them the finger and tell them to go kick rocks. But most of the people in the financial world are leftist retards, so they're pretty spineless. All right. Last up, let's see what we got here. This is an article from antiwar.com. It's titled Seymour Hersh, the CIA knows Ukrainian officials are skimming U.S. aid. Now, I normally don't get into this, Russia, Ukraine crap, but when they're stealing money from the taxpayer, I have a real problem with that. And that's why I wanted to share it with y'all. All right. Investigative journalist Seymour Hersh has published a report on Substack claiming that the CIA was aware of rampant corruption in Ukraine and the embezzlement of U.S. aid. Hersh alleges that the Ukrainian government has been using taxpayer money to purchase diesel from Russia to fuel its military, and that the Ukrainian officials are competing to set up front companies for export contracts to private arms dealers worldwide. Wow. It's crazy. I mean, we're paying for this. Hersh estimates that at least $400 billion was embezzled last year, according to one CIA analyst during the meeting between CIA Director William Burns and Ukrainian President Volodymyr Zelensky, the cross-dresser, in January. Burns reportedly presented Zelensky with a list of 35 corrupt generals and senior government officials, 10 of whom were subsequently dismissed after they cashed their checks. Hersh claims that Zelensky's quote, half-hearted response, end quote, to corruption and the quote, lack of concern, end quote, in the White House have angered some U.S. intelligence officials. Isn't it funny they call them intelligence officials? I mean, they're government employees. They have IQs under 100. An intelligence official speaking to Hersh criticized President Biden's top foreign policy advisors, Secretary of State Antony Blinken and National Security Advisor Jake Sullivan, saying that they, quote, they have, quote, no experience, judgment, and moral integrity. Well, they're Democrats. I mean, have you ever met one with integrity? The official went on to say that there is a, quote, total breakdown between the White House and leadership and the intelligence community, end quote, and that there is, quote, no strategy for ending the war, quote, in Ukraine within the Biden administration. Hersh's report comes from a series of leaked top-secret documents from the Pentagon and other government agencies surfaced online. Some of these documents reveal U.S. war planning for Ukraine and suggest that the U.S. doubts Kiev's ability to launch a successful counteroffensive, offering a starkly different view of Ukraine's abilities than what Biden officials have been saying publicly. Shocking. The report suggests that the rift between the White House and the intelligence community began in the fall when the Nord Stream natural gas pipelines were blown up. According to Hersh's earlier reporting, President Biden ordered the operation that took out the pipelines. Yeah, I mean, wouldn't that be an act of war on the United States by attacking a NATO member in Germany? I mean, maybe we should, attack Washington. I mean, maybe that would be the solution. So I don't know. I mean, those of us who are held hostage here in America, there's really not a lot we can do other than, hope and pray that the government collapses and the people responsible are brought to justice. But until that day, watch baseball, enjoy your life, and hope they don't steal too much of your money. All right, well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information is there. I hope you have a wonderful evening, and I'll talk to you next time. Adios.